Hello and welcome to The Explainer. Today we're putting on our financial analyst hats to break down a detailed technical report on one of the biggest stocks in the world, Apple. Our job here is to cut through all the jargon and turn it into a clear story you can actually use. Right, so we all know Apple. But when you're an investor, it's not about the brand. It's about the timing. What's the smart move right now? Is it time to buy, sell, or just hold on? This report is packed with clues, so let's dive in and see what the data is really telling us. To really get to the heart of this thing, we're going to use a 6-part analyst playbook. We'll start way up high with the 30,000-foot view, and then drill all the way down to the daily signals. By the end, you'll have a complete intelligence briefing on Apple stock. Okay, first things first, what is the big picture? Before you get lost in the day-to-day noise, you have to know the primary trend. Is the wind at Apple's back, or is it facing a headwind? Let's find out. Well, the report couldn't be clearer on this. For the last 4 months, Apple has been in a strong, confirmed uptrend. So that's our baseline. It's the big current that the stock is swimming in, and it tells us that, overall, the market sentiment has been really positive. So the long-term trend is like a tailwind pushing us forward. Now let's zoom in. We're going from the big map right down to the car's dashboard to check the daily gauges, the engine's RPMs, if you will. This is all about what's happening right now. And these indicators, think of them literally as the dashboard gauges for the stock. They don't just tell you the direction, they tell you how much force is behind the move. Is the engine roaring ahead, or is it maybe starting to sputter a little? Our first gauge is the Relative Strength Index, the RSI, and it's basically a momentum meter. Right now, the report clocks Apple's RSI at a pretty high 76. This little tool measures how fast and how much the price has changed to figure out if a stock is getting ahead of itself. Now, in simple terms, an RSI this high often means that buying has been super aggressive, pushing the price up really fast. It can be a little warning sign, a yellow flag, that the stock might be due for a pause or even a pullback. It's not a guarantee, but it's something we have to pay attention to. And here's where the plot really thickens. This is our first major contradiction. On one hand, you've got this strong long-term uptrend. But on the other hand, another crucial momentum indicator, the MACD, is actually flashing a sell signal. This is a classic conflict. The big picture looks fantastic, but the daily snapshot is showing signs of a potential U-turn. Okay, so with these mixed signals, a strong trend but weakening daily momentum, we absolutely need some context. Let's see where today's price actually sits compared to its recent history. This should help us figure out if that overbought signal has any teeth. This slide gives us that context perfectly. You can see the report identifies the average dip price, that's a potential entry point for buyers, down at about 250. The average top, where sellers usually show up, is around 272. And the current price? 273 and change. It's trading just above that historical ceiling. This adds some serious weight to the RSI's overbought warning. All right, let's look at a more advanced tool that analysts use. It acts a bit like a weather forecast for the stock's future. It's called the Ichimoku Cloud. Sounds complicated, but the idea is simple. And the good news from this forecast is that the price is trading well above the cloud. In the world of technical analysis, that's a very strong, very bullish signal. It just reinforces what we saw back in section 1. The big picture trend is still healthy and totally intact. But now let's look inside the forecast. This system uses 2 key lines, a fast one for recent action and a slow one for the medium-term trend. The report confirms the fast line just crossed above the slow line. That's a bullish short-term signal. So now we have another contradiction, right? The MACD said sell, but this Ichimoku crossover says buy. The plot definitely thickens. So we've got positive long-term signs, but these short-term signals are all over the place. A good analyst always studies the potential risks. So let's take a look at volatility and the underlying strength of this trend. Is it really safe? Back to our cloud forecast. The report points out that the cloud is thin. A thin cloud means there's less support or resistance holding the price in place. You can think of it like walking on thin ice. It's just easier to break through in either direction. So while things might seem calm now, a sharp move could happen much more easily. And this might be the single most important sentence in the entire report. After weighing everything, the report's conclusion is blunt. Stock is getting weaker, decreasing momentum. This just cuts through all the conflicting signals. It's telling us that even though the price is high, the engine driving it up there is starting to sputter. And why does this matter so much? Because a trend that's running out of energy is just less reliable. It's more vulnerable to bad news, more fragile. For anyone managing a portfolio, this is a huge alert about increasing risk, even when the price chart itself still looks pretty good on the surface. Okay, we've gathered all our intel: the long-term trend, the conflicting daily gauges, the price context, and the hidden risks. It's time for the final analyst briefing. Let's put it all together and see what we've got. So here's the bottom line. What we have here is a classic case of a strong, confirmed long-term uptrend that is fighting against some very real short-term warning signs. The stock is historically expensive, the daily momentum gauges are flashing caution, and the report itself says the trend is getting weaker. It's a real tug of war between past strength and potential future weakness. So we've translated this whole technical report into a clear story. The data suggests a strong stock that's showing clear signs of fatigue at a very high altitude. The final question isn't for the report to answer, it's for you. Are you the kind of investor who bets on an established trend continuing, or do you listen to the warning signs that the trend might be running out of steam? That's the decision this analysis leaves us with.